Have you ever lost more money on a trade that you were initially planning for? 99% of the time, this is because of bad risk management. And if you want to be a profitable trader, that's a skill you need to master. In this video, I'm gonna show you everything you need to know in order to achieve this. So get ready, bookmark this video, start taking notes, and let's jump right into it. So how much money you should be risking on every given trade? There are a couple of things that you need to look at. First, the monetary amount, and then also the percentage of your portfolio. As a general rule of thumb, I try not to risk more than 1 or 2% on any given position from my entire portfolio. But sometimes this amount of money might be too much for me as a pure dollar value. So I'm trading a low cap shitcoin and I don't want to really be putting, let's say, $5,000 or $10,000 on the risk. I will adjust my risk accordingly. And this rule applies for any kind of coin and also for any kind of percentage. For example, if you're trading Bitcoin, your risk might be just 1% of the move of the price. On a shitcoin, this could be 10 or 20%. Let me give you a couple of examples. Let's say you find a short here, and the example is on Ethereum on the 4-hour chart. You are seeing this level around here holding up as resistance. We have a bunch of swing failure patterns here, and then you have a lower high here and a lower low forming, and then you will decide to enter somewhere around here. So for this specific trade, if you enter here, the risk that you would be taking if we take these wicks is 1%, 1.1%. And this could easily be 1% of your portfolio, whatever that amount is for you, let's say $1,000. However, if you decide to trade a shitcoin, let's say like this one, like ID, and again, the very similar thing, we're on the 4-hour chart, we have a certain level here that is rejected once, and now we're consolidating just a little bit below it, and you decide to take this trade because you believe this level will hold as resistance. However, you can see here that the place where the trade gets invalidated, especially if you want to give it a little bit more room to breathe, is somewhere around this level right here. And this is 22% move to the upside on price. And this could still be adjusted and be just 1%, $1,000 of risk. You can do this with the leverage. So on Ethereum, you might be using even 20x leverage. Here, you might be using just 2 or 3x leverage. It all depends on you, but just stick to the rules no matter what the percentages are here. Also, once you start taking trades using your rules for risk management, keep in mind that there should be a cap of the number of trades that you want to take. For example, if you take 10 different trades on 1% risk, this is 10% risk on your entire portfolio. And imagine all of them go against you. Are you okay with this loss? With the monetary amount? With the percentage loss? These are all questions that you need to ask yourself and answer constantly while you're trading. Once you decide how much you want to risk on any given trade, the next super important thing is to be consistent. And there are a couple of things here. First of all, you need to be consistent on the type of trades that you are taking. I personally am always aiming for at least 2-to-1 risk to reward, and this simply means that for every percent that I'm risking on my portfolio, I'm looking for 2% in return if the trade works in my favor. This means that if I'm correct in 40% of my trades, I will still make a lot of money. And if this changes, and if you're looking for trades at 3-to-1 or 4-to-1, this means that you need to be right in a lot less trades in order to make money. So keep this in mind. And the second thing when it comes to consistency is that you don't need to fluctuate a lot with the percentages that you're risking. So let me give you an example. For this trade, you risk 1%, then it goes in your favor. Then you have a couple of trades that go in your favor with 1% risk. Then you get cocky. You think you've mastered the market. So now you're ready to risk 5% on a single trade. However, this one goes against you. So now you're scared because you lost 5% like this. And now you want to go back and risk again 1%. And this cycle could continue for a long period of time. I know this because I've been there. And I believe a lot of new traders go through these cycles. And that's why you need to stay consistent with the amount of risk that you're taking for a long period of time. Let's say you stay with 1% risk, and if you continue for months on end and you become profitable doing this, then you might raise your risk to, let's say, 2% or 1.5%. Don't go straight up or down because you'll be playing a rigged game against you, especially if trades don't go in your favor. And also keep in mind that as your portfolio grows, the monetary amount against one risk will probably also go up. So keep this in mind, and that's why I say always double check the monetary amounts that you're risking. If you're a complete beginner trading, a trading system might even sound weird to you, and you might be wondering, what the hell is this? Well, in short, this is pretty much the strategy that every trader has that gives him the most returns. And they stick to a set of rules, and once they see the rules playing out on the charts, then they enter the trades and they take just such type of trade. And they mostly don't speculate on other types of trades because they know that this works. However, this takes years, even sometimes decades, to develop a profitable trading system. And when you're a beginner, it's completely normal to have absolutely no idea what you're doing. And if this is the case, and if you don't feel like you have a system that works, it's completely fine to decrease the amount of risk that you'll be taking. This probably also coincides with taking many trades. And I'm personally not against this, especially in your early days, because this gives you the reps. And when you're playing with real money, you learn a lot faster on the markets. However, in order to not lose all of your money, you can manage this with risk. And then you have completely different set of rules. So you might not be risking 1%, you might be risking just 0.5% or even less on any given trade in order to test a system or to test a type of trade continuously and see if it works before you actually increase your risk. A very common mistake, especially with beginner traders, is finding good levels of support and resistance where you can base your risk off. And that is completely normal. Actually, I have accepted the fact that sometimes the market is out there to just get me.
Dump it.
And that's why I need to do my best in order to set good levels for risk and stick to them. And honestly, if you don't find a good level for the certain trade, that's totally fine. Maybe you shouldn't be trading this market. There are plenty of opportunities out there to find good trades. And the easiest trade setups and the most profitable I've personally taken is where the chart pretty much screams at you. And there are several ways to find good levels, and let me give you a couple of examples so you know what I mean. AOTC here has a great example of an area that could easily be used for trading as a risk area. We're here on the weekly charts, and this level around $100 has a lot of confluence. As you can see, this here is the 200 weekly moving average, which historically, generally speaking, is quite strong support or resistance. But also you can simply see that this level has been respected by price on many instances. If we drill down to the daily chart, again, you see exactly the same thing. Price respecting this very clearly. So in general, when you're looking for good levels to base your risk, you're looking for confluence. It might be a Fibonacci level. In this case, it's a moving average. It's a clear area where price is respecting. It's $100, so it's around emotional number. These are all confluences that make me think that this is a very significant level for this coin. And here now I can base my risk off. So for example, there was a swing failure pattern here and a retest of this level. So this could be a really nice short here, relatively good risk to rewards to the downside. Here's another example of worse levels. So this is Pepe, and as you can see, first of all, the coin is fairly new. It doesn't have that much price history. If you go on the weekly, there's been just several weeks of price action. And although this level here looks good because we have a lot of reactions on the weekly, when we go on the daily, you see that price hasn't really respected it that much, although we got a rejection here, but now it keeps selling off and now it's just stair stepping down. So maybe this level here is not the clearest. In many instances, there could be different reasons for this. In the case for Pepe, you could see that this is one level on the weekly, but then we had a lot of wicks. So it seems like price is also respecting this level. So yeah, you could just trade level to level, but since this is a shitcoin and there's not much price history, I'm not sure that I want to be taking trades just based on these levels. I would rather wait for more price action and then make decisions or whether I would use this support or resistance level. And I want to show you another example where I really think like the market is out there to get you. And this is DYDX. On a weekly, you can see this area right here around $2, $2.20, a very significant area for quite a lot of time. And if we drill down to the daily, you see again, this level has been respected. However, a lot of wicks to the upside. And if you have your stop loss quite tight, quite often you might get stopped out of this position, although this is a clear level. So just be aware, maybe it's the liquidity, maybe it's the market makers and so on and so on. There are a lot of reasons for you to get wicked out of positions, but when you see such kind of price action, just be wary. And usually you can tell when coins act like that, and with experience you'll be able to see this. But if you decide to trade this level because it's a much clearer level than what you usually see, then you need to consider this. So maybe if you're taking a trade, leave it a little bit space to run. And again, be okay with the risk of, let's say in this case, 5%, and make sure that the overall trade makes sense and don't take it just because the level here is relatively clear. In trading, emotions are pretty much 70% of the game, and it's super key to understand yourself and your personality in order to make good decisions whenever you're taking a trade and later whenever you're managing it. I cannot tell you the number of times I've taken a trade, it starts going in my direction, it's very close to my take profit targets, and then I slightly start moving my profit targets up because I'm too bullish, I think this will go to the moon, and suddenly the price reverses and goes back to my entry and even stops me out. And also something else has happened. After I'm scared and I have taken losses, I'd start moving my stop loss too quickly to break even though the trade might go back a bit but still be intact and not being validated. This means I'll get stopped out, I'll probably pay some money for fees, and I will still see the trade after I've been stopped out go in my direction, which is extremely frustrating. I wanted to give you a quick example of a situation where you could find yourself, your emotions taking over, and that is Bitcoin here. You can see first we had a big sell-off, then price started consolidating, and then potentially there was somewhere in here, if we go down to the 4-hour chart, there was a sign for a long. As you can see, we were starting to break out of this little accumulation. So let's say you bought this, and also there was a factor here. So we had the news that Grayscale won the case and you're very excited. This is great news for crypto. We're all bullish, bear market is canceled, let's just run it up. And that's what happened, very big green candle, and then we stopped somewhere here. And if you haven't been smart and taking profits, you could have given all of them back. And why would you act like this here? First of all, you might have missed just purely technical reasons, because if you go back to the daily, we are in this huge range right here, which is also visible on the weekly. And also this area right here is the midpoint of this range. And even if we jump on the weekly, you can see that here at this area, let me just zoom in a little bit, and this area is also the 200 weekly moving average. So there are a lot of confluence in this area. And on top of this, we had negative news just a couple of days later. So I think this also contributed to the sell-off. But if you haven't been smart and taking profit and even taking the signs that, price is reversing here, last resort for taking your profit here, and you could have easily given everything back and even lost money if you haven't been smart. And these couple of examples are extremely common among all kinds of traders. And the only way to manage this whole thing is to start knowing yourself a little bit better. Are you a greedy person in general? Are you afraid of the markets? Do you have emotions? So are you really angry and you want to be correct and you want to be right? And although in the markets, as I said, you need just 40% wins in order to make money. However, for the other 60%, you might have a lot of mental issues that you need to solve in order to become a profitable trader. And in order to do this, you just need to write everything down. And the more trades you have, you'll start seeing the patterns. I can easily tell you, just stick to your rules. You put the stop loss here, you put your profit target there, just stick to the plan no matter what happens. But we all know it's not that easy and it's not going to happen, especially in the beginning. So once you see the patterns in your trading journal, then you'll be able to self-evaluate yourself. And next time when this happens, you might go back and say, okay, I've been doing this for the past year or so. So maybe it's time to change and maybe I should take profit here, or maybe I shouldn't be moving my stop loss that fast. That's everything for this video. It's been jam-packed with information. Let me know if you have any questions, post them down below. Subscribe to the channel, and if you find this valuable, please share it with other traders, because a lot of people struggle, especially with this part of trading. Thank you for watching, and I'll see you in the next one.